Hi, congratulations for completing all the 9 sessions. Now it is session number 10, tutorial number 1. Estimate project cost management process. Types of cost. There are various types of cost incurred during the project. First, direct cost. Any cost that is identified specifically with a particular final cost objective is a direct cost. Indirect cost. Any cost not directly identified with a single final cost objective is known as indirect cost. Fixed cost. Periodic charge that does not vary with business volume. Variable cost. Cost that fluctuates based on the business value. Opportunity cost. When there is a decision to be made between two opportunities, the opportunity cost is the value foregone for not doing one option. Life cycle costing takes into account cost of development of a project and also the cost of supporting during the life cycle. Sunk cost. Cost already incurred which cannot be recovered regardless of future events is known as sunk cost. Now let's have a look at estimate cost inputs. In order to estimate the cost, there are certain inputs that are critical. Let's have a look at them. Cost management plan. The cost management plan defines how project cost will be managed and controlled. It includes the method used and level of accuracy required to estimate activity cost. Human resource plan. Human resource plan provides detail on project staffing attributes, personnel rates, and related rewards and recognition. These are necessary components for developing the project cost estimates. Scope baseline. Scope baseline include inputs from scope statement, work breakdown structure, and work breakdown structure dictionary. Project schedule. Project schedule provides details on the type and the quantity of resources and the amount of time which those resources are applied to complete the work of the project. All these factors directly impact the cost. Risk register provides input related to cost associated with risk response. Enterprise environmental factors. Enterprise environmental factors include availability of resources, published commercial information, organizational process assets. These include cost estimating policies, historical information, cost estimating templates, and lessons learned. Estimate cost, tools and techniques. There are many tools and techniques that are used to estimate the cost. Let's have a look at the key tools and techniques. The first, expert judgment. Expert judgment, guided by historical information, provides valuable insight about the environment and information from prior similar projects. Expert judgment can also be used to determine whether to combine methods of estimating and how to reconcile differences between them. Analogous estimation. Analogous estimating relies on historical information to predict the cost and current project. This is a top-down approach, which is a good technique for fast estimates to get a general idea of what the project may cost. The accuracy depends upon how similar the two projects actually are. Parametric estimating. Parametric estimating uses a mathematical model based on known parameters to predict the cost of a project. A parameter can be cost per unit, cost per cubic yard, etc. Two parametric estimating techniques are regression analysis and learning curve. Bottom-up estimating. Bottom-up estimating is a method of estimating a component of work. The cost of individual work packages or activities is estimated to the greatest level of specified detail. The detailed cost is then summarized or rolled up to higher levels of subsequent reporting and tracking purposes. The cost and accuracy of bottom-up estimating are typically influenced by the size and the other attributes of the individual activity or work package. 3-point estimating. The accuracy of single-point cost estimate may be improved by considering estimation uncertainty and risk and using 3 estimates to define an approximate range for an activity's cost. These 3 options are most likely, most optimistic, and pessimistic. Most likely, the cost of the activity based on realistic effort assessment for the required work and any predicted expenses. Optimistic, the cost based on the analysis of the best case scenario for the activity. Pessimistic, the cost based on analysis of the worst case scenario for the activity. Depending on the assumed distribution of values within the range of the 3 estimates, the expected cost can be calculated using a formula. 2 commonly used formulas are triangular and beta distributions. The formulas are triangular distribution, estimated cost equals optimistic, most likely, and pessimistic estimates divided by 3. Beta distribution, estimated cost is calculated by adding optimistic 4 times of most likely estimate, adding to pessimistic estimate, and the total of these is divided by 6. Estimate cost, tools and techniques continued. Reserve analysis. Reserve analysis adds reserve amount contingency to the cost. This is done to take care of uncertainties in the project. Cost of quality. Cost of quality includes assumptions related to cost of quality. Project management software is helpful in performing calculations, organizing and storing large amount of information needed for preparing cost estimates and for reporting purpose. Vendor bid analysis. Vendor bid analysis may include analysis of what the project should cost based on the responsive bids from qualified vendors. Group decision-making techniques. Based on approaches such as brainstorming, the Delphi or normal group techniques are used for engaging team members to improve estimate accuracy and commitment to the emerging estimates. When it comes to agile practices, agile uses a widely adopted method called planning poker, which allows the team members to vote and indicate their estimates, and at the end of the process they're going to collaborate to make the final decision. Now let's have a look at estimate cost outputs. At the end of the estimate cost process, there will be certain outputs. Let's have a look at them. First, activity cost estimates. Activity cost estimates details how much it would cost to complete each scheduled activity on the project. Basis of estimates. Basis of estimates include supporting documentation of the cost estimates and it may include documentation of the basis of estimates, documentation of all assumptions made, documentation of any non-constraint, indication of the range of possible estimates, and indication of the confidence level of the final estimates. Project document updates include project risk register and cost management plan. Estimate cost exercise. Revise tools to estimate cost. You figure out a best case scenario and a likely scenario and a worst case scenario. Then you use a formula to come up with an expected cost for the project. The tool used by you is well done. The second question is, John creates a document with all the historical information from similar project he had done in past and also takes input from a contractor who provides his input. The tool used by John is well done. Estimate costs answers to the above exercise. You figures out a best case scenario and a likely scenario and a worst case scenario. Then you use a formula to come up with an expected cost for the project. The tool used by you is 3-point estimate. The second question, John creates a document with all the historical information from similar project he had done in past and also takes input from a contractor who provides his input. The tool used by John is expert judgment. Determine budget. Once the estimate of each of the activities is arrived at, the next project cost management process is to determine budget. It is the process of aggregating the estimated cost of individual activities or work packages to establish an authorized cost baseline. This is where the control account concept comes into picture. The estimated cost of the activities are aggregated to arrive at the cost budget at the control account level. Once approved, the cost budget becomes the cost baseline of the project. Project cost performance is measured against this cost baseline. Example, how much more would the project cost be compared to the original cost baseline? The cost baseline includes all authorized budgets, but excludes management reserves. The inputs used in the determining the project budget process are the activity cost estimates and the basis of estimates, which are the output of the previous cost management process. The cost management plan lays the framework for the cost management processes in the project. It provides guidelines such as the budgeting cycle, tools and techniques used to prepare and approve the budget. In addition to these two important inputs, scope baseline is also looked at. Project schedule provides aggregate costs in a particular calendar period to ensure how much money can be made available during that time. Similarly, resource calendar provides information on the resource which is assigned to the project at a particular point of time. This information is then used to indicate resource cost over the duration of the project. Risk register gives an understanding of the overall level of risk on the project and therefore the level of contingency reserves that need to be built into the budget. Agreements entered into with the suppliers are also required to finalize the budget. Again, organizational process asset is an input because organization may have few policies for reporting the cost budget, or there might be some cost budgeting tools being used. There are various tools and techniques used in determining budgets. Cost aggregation technique involves adding up the cost and aggregating them at the control account level so that the cost can be managed in a better way. In reserve analysis, once the costs are estimated, some extra amount is added to the estimate as a management reserve to take care of any unplanned activities. Expert judgment is a technique in which an expert's help is sought to estimate the activity. Expert is someone who might have worked on a similar project in the past and has good idea to estimate the activity cost involved. Historical relationships are used to predict the total project cost using mathematical model. This is similar to analogous estimate or parametric estimate method. Funding limit reconciliation technique is used to ensure that the cost on the project is budgeted or spent as per the availability of the fund. For example, if the project can get funding only up to 50,000 a month, the project budget should be planned accordingly. The output of this process is cost baseline. This is an authorized project budget over a period. This is used to measure, monitor, and control overall cost performance of the project. In addition to this, the project funding requirements are also arrived at. Funding requirements means how much fund the project requires monthly, quarterly, or yearly for the execution. The last output of this process is project document updates. There will be various project documents that can be updated to reflect the output of determining budget process. Now let's have a look at the project budget components. So there are various project budget components utilized and allocated for any given project. In the figure shown in the slide, x-axis represents the total amount allocated for the project, whereas y-axis represents project budget component. So as a whole, the entire project is allocated a budget, which is known as the project budget. So that's the total costing allocated for your project. The project budget is divided into two components. The main component is known as the cost baseline. Cost baseline is the total cost allocated for your project. That excludes the management reserves. Management reserves are to be used at critical situations where you have run out of the costing allocated for the project. The cost baseline is assigned to the control accounts. Control accounts have two components of costing or budgeting. That is, work package cost estimates and contingency reserve. When you do a work breakdown structure, when it rolls up to work packages, at the work packages level, work packages are estimated. In estimating work packages, the teams and the management keeps a buffer, that is contingency reserve. However, contingency reserve is a part of the control accounts. In case the teams run out of the money allocated for the work package cost estimates, the teams may use contingency reserve. And then when it comes to work package cost estimates, it's further divided into two components. One, activity cost estimates. Each activity of the project is estimated. Second, activity contingency reserve. For each and every activity, there is a contingency buffer. So altogether, this figure represents all the components involved in cost estimating. Let's work on an exercise. Determine budget. Monica reads a newspaper article that says there has been a sharp increase in steel cost recently. She knows this was not in her contractor's original plan and decides to put a few $100 aside to deal with the price hike if it should happen. The tool used by Monica is parametric estimating, reserve analysis, cost aggregation, fund limit reconciliation. What do you think the answer is? Let's give it a few seconds and see whether you can answer. His answer. The answer is reserve analysis.